Hello guys, again we move on with the second part where we deal with the Bollinger Bands and the RSI on the same chart, on the same extended chart here with the binary option broker. And these are indicators available on any binary options trading platform. So we explained the 30 and the 70 and we want to add a new level, and the level would be the 50. This is quite very easy to add. Either you go like this or simply put it 50. And it represents the middle point between or where price moves. Now, the key here to trade binary options is to use both the volatility aspect of the binary options levels with the three levels on the RSI. So the focus would be on the 50 and on this green line here. Why? Well, we need to define first the move that the market makes, namely the classical interpretation of the RSI is to sell or to buy put options when the market goes into overbought territory, or to buy call options when the market goes in oversold territory. This works most of the times, especially when the market is in a range or forms a range. However, when the market forms a trend that the Bollinger Bands will tell us, when the market forms a trend, that doesn't work, or simply it doesn't work anymore. Therefore, all we need to do as traders is to define the specific or to try to look for a trend. And the key here is to interpret this or to look for that trend, with where market breaks. So it broke lower here, and the bias is that it will form or it will start a bearish trend because it broke below the 30, and then we want to, in a bearish trend, everyone wants to sell a spike or to buy put options when the market moves lower. Or in a bullish trend, everyone wants to buy call options. So in this case, we look at this as an opportunity for a spike, and we want to go and buy a put option. But when to buy a put option? Obviously, because this can continue like this. As long as it doesn't go above the 70 here, so to change the nature of the bearish trend, we want to buy put options. When market broke higher above the EMA here, the middle Bollinger Band, and then comes and closes below the Bollinger Bands here. And all we need to do here is to compare, to look at the level, at the 50 level. It actually broke lower not with this big candle, but with the one with the previous one. So on the previous candle, in order for or to have a confirmation, we need for what? We look for the market to close below the middle Bollinger Band, so this would be the perfect candle, below the middle Bollinger Band, and you look at the RSI to be below 50, Look on the left side here, when I put, actually let's try to put the OHSC here on the screen. Actually the OHSC will give only the values, not the indicators as well. But anyways, here, and then look at the RSI on the left side of the screen. The RSI value is 47.51, which is a good, it still shows bearish conditions because the market is below the 50, and the close is below the EMA. This is a very nice place for going and buying put options. And then the market moves lower, breaks again below the 30, confirming the new coming trend, correct? The new coming trend. Pushes higher above the EMA, pushes higher, failing to go into bullish territory. Remember, if it breaks above 70, we spot here the start of a new trend. And then with another candle goes in below the EMA. The same thing comes. It is below the EMA, yes. The first candle that closes below, yes. Then all we have to do here is to focus on what? The RSI. Look at the RSI on the left side of the screen. What's the value? It's 43.34. We try to spot a bearish trend. Yes. We have a bearish close below the EMA. Yes. Is the RSI below 50? Yes. Well, ladies and gentlemen, that's a very nice place to go and take a put option right here, right now, on this candle. Remember the time frame, and remember the expiration date. You don't aim for the end of the day, but you aim for, if it's a Monday, let's say for the end of the week, or if it's a Monday or in the second half of the month, you aim for the end of the month, and so on. These are typically expiration dates given by any broker. And then we go again, and then the market moves lower, breaks above the EMA here as well, and then this would be another move lower here, but at this point in time we use the volatility indicator. What does it mean, the volatility indicator? Look at the two bands here. Normally or ideally we should have with the candle that followed, we should have previously the price breaking the volatility band, because the Bollinger Bands are volatility bands. Here, with a break high and then with a move lower below this EMA, there is no volatility, or the price didn't touch the upper Bollinger Band. So ideally, we should skip this signal here. And then the market goes, touches the volatility band, and now all eyes should be on the first close below the EMA, the middle Bollinger Band, the green line. And we check the green line. The green line here, or the close here, comes at what? The close comes at way below that green line. We look at the RSI 48.86. This is a very nice place to go and buy a put option, just like that. Another put option, just like that. For what? For we are still in a bearish trend and we want to trade the spikes in a bearish trend. And then the market goes, closes above, then closes below, but not touching the upper Bollinger Band, and so on and so on and so on, and we adjust with the trade. How about this one here? So it closes above the EMA, it touches the volatility band, and then comes and closes below the EMA here, But look at the RSI. Is the RSI below 50? No, the RSI has a value of 50.07. It means that the previous trend that we interpreted, this one, as a bearish trend, and the trend that we used to buy put options, that trend is about to change. How will we know where to go long, when to buy call options? Well, definitely we do not buy put options here. We wait for the market to do what? We wait for the market first to break high, and then we use the same principle, but the other way around. It moves what? It moves lower, and then we'll go and buy call options, and so on and so forth, and so on and so forth. This is how you trade them both, and aggressive traders won't wait for the market to go into the volatility bands here. For example, in this trade, you will miss this trade if you go into if you consider the price needed to reach the volatility band. Aggressive traders will not consider that and will take the chance for the three trades. These two setups have greater chance to come to fruition than this one. But nevertheless, this one, let's say, forms in really aggressive trends, like in this case. You don't have, so the market closes below the EMA, and then with the very next candle here, we interpret it. What's the value? Look at the RSI, it's 59. Is it bigger than 50? Yes. Is the closing above the green line, above the middle Bollinger Bands? Yes. Well, that's a very nice trade for a call option. This is a very nice setup for a call option. And the same here. The same here, and so on and so forth, and even the same here. So you have 1, 2, 3, 4 possibilities on the long side, because the RSI is simply above the 50 every time the price reverses from the middle Bollinger Band. Now there is one catch, of course. And this is the beauty of technical analysis, because if you do something on a time frame, then that setup is valid on all the time frames. So everything that we explain here in these two videos on the daily chart, on the Euro US dollar, can be applied on the 5-minute chart, on, I don't know, Great Britain Pound US dollar, or Great Britain Pound Japanese yen, or whatever the currency pair you want to use. This is a very powerful setup with two different degrees or risk degrees, with the most powerful or with the most accurate trades being the ones that consider also the volatility. So when price reaches the volatility bands before the close below or above the EMA, but the other trades as well go very well in bullish or bearish, or in strong bullish and bearish trends. Thank you for being here. Hope you enjoyed this one, and have a great day. Bye bye.